Uh-oh, what just happened? Welcome to the Crypto Queen Perspective. Good morning, good afternoon, wherever you are in the world, and welcome. Anything that you hear today is not financial advice. Please, it is at your own risk tolerance. And we're going to dive in today with a very special guest who I've had on the show before. It is Warren Paul Anderson, and he is a seasoned blockchain executive, entrepreneur, and a product leader. Warren's been at the forefront of Web3 innovation, from co-founding one of the first DeFi platforms on Bitcoin to leading product development at Ripple, where he was instrumental in building on-demand liquidity. He's also driven privacy-focused solutions at Discrete Labs and continues to push the boundaries of decentralized technology. So I'd like to welcome Warren. How you doing? Welcome to the Crypto Queen Perspective Live. Thanks for joining us today.
Thanks for having me on again. It's great to be here.
Yeah, so we're going to dive into some updates on IMUA. But before we do that, do you want to just give a quick snapshot of yourself other than the intro that I gave you?
Yeah, you pretty much summed it up. I mean, I've been operating in the space full time since 2013, and I've built a lot of really awesome infrastructure and moved the space forward in multiple different ways, both in when I was a core Bitcoiner, and then later as Rippler, working on the XRP ledger, and then after that, working on ZK privacy, and now kind of moving the space forward with a new shared security model with IMUA. So that's about it.
Yeah, awesome. Thank you. And just in one line, can you tell us what IMUA is all about right now?
Sure. IMUA is the universal protocol for shared security, and it exists in a time where trust is at kind of the lowest point across the board. IMUA exists to effectively use on-chain verifiable trust to secure off-chain trust systems. So that's why we exist.
Awesome. Thank you for that. So I guess since our last AMA, I guess what I want to do today is seeing what's been the biggest shift or milestone for IMUA and how IMUA has evolved and what role you're playing in the XRP ecosystem.
Yeah, definitely. So we got started on IMUA back in early 2023. We spent several months on the architectural design because these systems, once you start writing code, it's really hard to make changes. It's not like Web 2 where you can inherit technical debt and make those changes kind of down the road. You really have to kind of get it right the first time on the technical architecture. So we spent a lot of time there. 2 years ago in September 2023, we started actually writing code, for the network. And we're at a point right now where we've had testnet live with over 50 different validator operators who are securing networks of, dozens of networks across the board. And we're looking forward to pushing toward mainnet TGE here in the next several weeks. So we're kind of coming to fruition after 2 years of hard work. And our kind of position within the XRP ecosystem has been evolving a lot. When we first got started on this, we took a very chain agnostic approach where we wanted to bring staking and restaking to lots of different networks, and then IMUA acts as kind of the coordination engine for all the rewards, all the distribution, and of course the actual the security of the off-chain systems. And really what happened was, XRP became kind of first and foremost in terms of demand, because XRP is not a yield kind of generating asset, right? And that's by design. I worked with David Schwartz intimately, on the XRP ledger, and he always took the stance that, no incentive is the best incentive. And I am a believer of that for XRP. But that also doesn't mean we can't introduce yield products, for XRP. So for the first time, we're going to be implementing a form of staking with XRP, where you can actually earn yield by locking up your XRP, delegating it to the host of validators that are running and operators that are running on IMUA, and then they can elect to secure the off-chain services, and with that you get yield. So the yield is actually coming from sustainable revenue that the services are paying. So it's not just speculative yield based on emissions. It's actually yield based, backed by revenue.
Yeah, that's the number one question that the community always asks, Warren. So I'm glad that you touched on that straight away, because the number one question is, where does the yield come from? But let's look. I know you've got a hot update. We were just having a chat in the back before we went live about this. So would you like to reveal what the hot update is and what you're working on to roll out in the coming weeks, please?
Yeah, sure. So I was planning to do a live demo for the audience here, but we made some changes last night and broke some things, and that's what happens usually. But we are going to be rolling out the staking dashboard here shortly. In the next couple of weeks, we're going to be opening up what we call a Genesis pool campaign. What that is, specifically for XRP holders, will be able to effectively deposit their XRP, which basically means they're locking up a portion of their XRP on their self-custody wallet. We've integrated with a number of different XRP wallets, and they can effectively stake that to secure the IMUA chain first. So this is a novel bootstrap technique that we created called restake proof of stake. So basically what it does is it invites holders of Bitcoin, native ETH, native XRP, and then ERC20 tokens to be able to stake those, lock up and stake those tokens to secure the IMUA network. What that means is there's going to be a period of 30 days where this Genesis pool will be open and live. We'll set a threshold amount for how much of the assets will be used to secure the network. Once that threshold's met, or 30 days, whichever comes first, the deposit window closes, and the network, there's a timer that's kind of starts, where the timer is basically a timer to the mainnet launch. So it's a very open, transparent, decentralized way to bootstrap a layer one network. Because traditionally, like, layer ones are a little messy. The actual genesis happens usually, behind closed doors. It's very centralized. There's hand-selected validators. We didn't want any of that. We wanted it to be a more open, decentralized process. We're not picking the validators. And then once that kind of countdown happens, the validators come to agreement on the genesis, and then the network launches. So it's a radically kind of transparent and open, decentralized way to bootstrap this network. And then for staking and helping to bootstrap that network, obviously there's rewards that are going to be distributed for those early stakers. So we're excited to roll that out. We've got a lot of great updates to be releasing here soon.
Yeah, fantastic. Thank you. I love that. I love that you're being fully transparent, and you definitely have a breadth of experience in being able to, put that into play. I just wondered a couple of things. Can you walk us through what you believe is the most exciting feature of the new DApp?
Yeah, I think it's very cool that you can, it's multi token. It doesn't matter if you're an XRP, holder and you've been working in XRP, community for a long time, or you're a core Bitcoiner or a core Ethereum. We just kind of take a very agnostic kind of approach, and being able to support that, it drastically increases the pool of liquidity. And so I think, for the first time, hopefully we'll see, some of these communities kind of unify under kind of a common universal protocol that, we call IMUA a tribe of tribes. And IMUA itself is a Hawaiian word. It means to move forward. And it was used by, King Kamehameha in the late 1800s to actually unify the Hawaiian Islands to make it the Hawaiian Kingdom. So we're really, really big on kind of unifying a lot of these chains. But XRP is like a massive part of that, because for the first time, you're going to have this kind of native feel to staking yield. There are other products out there that are emerging that have XRP yield, but those are usually the yields coming from some form of like what they call CDFI, where it's being put into DeFi kind of products. But this is the most like kind of pure kind of native form of yield. And why that's important is because, like, in the Ethereum community, native staking is what they call a benchmark rate. So that's like in traditional finance, they call it the risk-free rate. I don't like to use that because there's risk to everything. But it basically what it is, it's the foundational rate that you can build additional yield products on top. And so, one of the reasons why XRP kind of DeFi hasn't really flourished yet is because there hasn't been a benchmark rate to set that other products can build on top of that. So we're really excited to introduce this kind of native kind of yield for the first time, and are working with a lot of different projects kind of behind the scenes to start introducing more yield products on top of XRP.
Yeah, well, for me, I love that you have XRP, but you also have, because I'm chain agnostic as well, whilst I support the XRP ecosystem, I also go beyond that. So I've always been chain agnostic, and I don't believe that there's one chain to rule them all. So I love that. That kind of aligns with who I am and where I'm at. But I wanted to ask, I just wanted to touch on the wallets and what wallets, because I know, there's lots of different wallets out there. So if you could just kind of say the wallets that you've integrated with, just so that people are aware. Not because we're favoring any particular ones or anything. We're being very diplomatic here. I just want my viewers to know what you're integrated with, please.
Yeah, and again, the idea here is we end up supporting all the major wallets, when XRP. We don't want to, pick favorites or king make any single one. And we have a list that we're walking through. Currently on the demo, we support Gem Wallet as like kind of the primary, and then there's additional wallets that we're adding, as we speak. In fact, that was the update that broke the demo, is adding the additional wallets. But we're also like, we can kind of get into this, but like, we're going to be having a pretty big presence during KBW, Korean Blockchain Week, and that's a pretty strategic market for XRP because, over 20% of the circulating supply of XRP is actually in Korea.
Korea,
Now,
correct.
now Korea is a fascinating market. I've been going to Korea, since pretty regularly since 2012. Spent some time there when I was, when I was working on XRP at Ripple. We learned, a lot about the Korean market. It's a very retail-driven market. There's actually hasn't been to date very much institutional participation, and they're expanding that to. But a lot of the XRP that's held in Korea is actually on exchange, and this is kind of across the board. A lot of the XRP is held on exchange because there really hasn't been a lot of on-chain DeFi activity. So it just makes sense to hold it on these exchanges. So we've been talking to a lot of these exchanges, strategically to have them support the XRP staking that we've built. And we think this would be great for the community because, regardless of whether you held your XRP on exchange or in a non-custodial wallet, we want to be able to, to bring that yield to the users. So we're big on, working toward where the users are. We're not, making any promises of when that will be supported, but that's at least like an exciting kind of development over the next, I'd say probably 12 months. But we'd like to get to a point where all the major exchanges do support XRP staking through the IMUA protocol, and people can get access to the yield through that.
Fantastic, thank you. Now you mentioned also, I'm just going to backtrack a bit. You mentioned that there's a 30 days. So is that an opt-in and locked up until the end of the 30 days? Can you opt out or no?
Yeah, so you basically when you lock up your basis, I'm going to lock up for this period, and we'll get into more detail on what the timeline it is. It's actually going to be 30 days plus more after kind of TGE, and it's one of those you can stay locked up. The more you stay locked up, the more yield you're going to earn. Okay. So there's you're getting rewarded for staying locked up longer. For the XRP audience, we've kind of been doing a lot of discussions and stuff. We found that a lot of XRP holders just don't sell. They just they hodl. For like me, I've sold a very tiny amount of XRP since back in 2016, and I just hold it. It's like Bitcoin. I don't touch my Bitcoin. I only buy more when I can. So the actual withdrawal. There is an ability to withdraw our claim, and we'll get into we'll showcase more details of what that means. But basically, it incentivizes kind of longer term holding, and the longer you hold, the more rewards you get.
Okay, awesome. So with the new app and early adopters, first of all, maybe you can tell us how people can be an early adopter or jump in there and stake their XRP, and then what are you hoping to gather from the feedback from people that do that?
Yeah, so the first touch point, that people are going to be able to get involved is when we launch the Genesis Pool campaign, and that's the whole mechanism that I just described, and will be very detailed in what the expectation of the rewards are, what the duration is, and we are really hoping to get feedback on the interface. We're predominantly a protocol engineering team, so we're pretty raw and lightweight on the interface design, and so I expect to get lots of brutal feedback on the UI, which I'm totally please give that, so we can make improvements. But the functionality, it's important that functionality works, right? Because the underlying protocol and the security and everything, we want to be very, very buttoned up and world class. But we will get, I'm sure, lots of feedback. We already have kind of running the demo in certain environments with certain groups, and are making changes on the fly. So that's big feedback. And then also, we're hoping to get kind of just, additional, we've been, this is probably news, but we've been talking to quite a few of these emerging digital asset treasury companies that are, raising, funds for equity to go acquire, in this case, XRP, Sol, Bitcoin, etc. And these digital asset treasury companies are actually, because their business is literally just holding these assets, they're always looking for how do they make additional yield on those holdings. In the XRP ecosystem, there are very few, markets that you can actually earn yield on that. So we're excited to start to work with some of these digital asset treasury companies, and which will augment a lot of the volume and TVL that we'll also get from more retail.
Yeah, awesome. Thank you. So I guess I wanted to move on to the next hot update. I know that we did touch on the Genesis pool at the beginning. You spoke about that, but if you could go into a little bit more explaining about the campaign and the staking yield benefits for the XRP holders, that would be awesome.
Sure. So the initial, because we say like the yield is backed by, real revenue, and not just kind of speculative. There's basically two ways to earn yield on native tokens. The primary way, which is how most tokens do staking yield, is through emissions. So they said it's, there's some emission schedule which basically, introduces more of the native asset into the protocol, and that's used for rewards for the system. And we call that like it's not sustainable yield, because you can only emit so many of the tokens. With XRP, there's zero emissions. Like it's 100 billion units of XRP, and that's that. Other like with Ethereum, it's kind of unbounded emissions. Other tokens and protocols have different emissions rates. So that initial, what you're doing is by participating in the Genesis pool, you're effectively helping to secure the IMUA network. The IMUA network is secured in two ways. One, its own native token, which is the IM token, and that's a classic kind of staking token. It's used to reduce spam on the network, etc. And that's basically like, there will be initially for this Genesis pool campaign a form of emissions, because the IMUA network is actually the one that's paying out the rewards first. So we're basically dog fooding our own system. We're the first service on the system where IMUA is bootstrapping itself using IMUA. So we're going to be paying out the rewards, using an emission schedule that actually doesn't inflate the total supply. It's kind of baked into the tokenomics of the rewards, where we've sectioned off a portion of the total supply for rewards for the first 4 years, and then that rewards pool is going to go toward the initial yield. So we're doing that, and then once we start onboarding more of these additional kind of third-party services, which we have over 12 that are building on testnet right now. I think half of them are live. We've got 40 in the pipeline. Once we start introducing more of those services are going to be contributing to the yield through revenue. So what they're doing is they're basically renting the verifiable trust or decentralized security from these different chains, XRP included, to use to kind of to verify some of the commitments that they're making within their systems. So you don't have to trust, it could be like AI networks, inference and training, where maybe you don't trust that they're making the claims, or they're running the training on the proper data, whatever it is. There's a variety of use cases. We publish those, but those are the revenue back from those services actually goes to contribute to the yield of the rewards. So it's real rewards, real yield. We're working on a way, and this is part of the design, to be able to earn the actual rewards and yield in any token. So if you stake XRP, you can earn your rewards in XRP. You could potentially, earn your rewards in Bitcoin or ETH or Sol or whatever it is. Or if you're, um, uh, a Bitcoiner and you want to earn rewards in XRP, you can do that too. So this is like a very pretty cool way and like radically kind of multi-token design. You don't see this in a lot of protocols. In fact, I haven't seen it really in anything. But it's exciting to be able to kind of start to release that, because you could do a lot of different things.
Yeah, I think that's super exciting, because I actually haven't seen that anywhere else either, Warren. So that's fantastic. I love that you're supporting the XRPL ecosystem. I've got a couple of questions that you might not be able to answer, so that's okay, but just for the viewers and the audience. Do you have a launch timeline, considering that you broke some things and you couldn't do the demo today? Do you have a launch time, or is it just in Q4? And
yeah, we're shooting
to launch?
Yeah, we're shooting for Q4. Initially, we had a launch window mid-October for mainnet. That got delayed a little bit due to some other things, but we're still aiming for kind of like shortly after that. But some of it we can't control, because once the Genesis pool campaign is live, it could be, maximum 30 days from when that goes live, or it could, if the threshold's met within a week or a couple days, then it could be that. So it's kind of cool because we don't have a lot of control there. But once we light that fuse for the Genesis kind of full campaign, it's like we don't have a lot of control as to when that's going to trigger, when mainnet will actually cross over and trigger. Yeah. So we're completing some security audits kind of in the background, and kind of hustling to get all that work done, and making sure there's also market infrastructure there for the native token, so that the TGE, we can see a healthy, liquid market, upon launch.
Yeah, I've got a couple of follow-up questions for you. So you mentioned how the pool is structured and the balance rewards for sustainability with the IMUA being paid out from the IMUA token, but what kind of yield can participants realistically expect from the Genesis pool? And then I have another question for you as well. Sorry to throw them at you.
Yeah, I think, a lot of the factors kind of depend on, how the launch goes, what the amount of TVL is, what the kind of the market cap, the native token. But we can reasonably expect, I'd say like to set expectations in the mid kind of single digits initially, potentially higher. I will say that, for now, to set expectations. I'm a big believer in trying to manage expectations with like like under promise, over deliver.
Right?
Yeah. So, but it should make material sense, and it's certainly going to be a lot more than what most XRP holders are getting now, which is effectively zero. So we want to make it worthwhile and make sure that the risk reward, makes sense.
Okay, and you just mentioned my favorite word. So here comes the next question. What risks or safeguards should users understand before staking, Warren?
Yeah, with staking, the risk, that basically what you're saying is, I'm willing to put up these tokens as collateral locked in my own wallet, and earn rewards, on those tokens. That's the upside. The downside is those tokens are now subject, in your opting into this, to slashing. Now, this this is a new kind of theme for XRP holders, because there's no element of slashing or staking in native XRP. It's pretty old hat for proof of stake, networks like Ethereum. But what we're doing here is when it comes like staking or slashing risk, there's a lot of I think overblown discussion about the risks. First of all, the slashing penalty, right, which basically happens, slashing is triggered if one of the off-chain services that is being secured violates their own rules. So this happens like in Ethereum. If there's an issue with the Ethereum core, software and or an operator double signs, or there's downtime or whatever, the amount of ETH that you're staking can be slashed. That amount can be basically like an immaterial amount, just enough for it to be like the pain of like a pinprick, right? It's like, oh, like that's not great. It doesn't have to be like all half of your locked tokens are going to be slashed. So that's like, I think when people talk about it, for some reason, they always use the example of like you're going to lose half of all your locked up tokens. That's not the case. We're actually setting the slashing conditions. These are up to the actual the services that they're building, but we're recommending that the initial slashing conditions, slashing penalties, are very low, and that's so the network can continue to become more stable. We recognize things happen, and so the actual penalties themselves should be extremely low. Another example, like for instance, Solana, which is a staking network, hasn't had native slashing since inception. So like there is a path where like the slashing is so small that it almost doesn't exist. But it's just enough to create kind of downside, like I don't want to misbehave on this network, or else there's going to be a slashing penalty. So, but there is that risk, right? And we take a lot and we're taking a lot of precautions to kind of set that. One, if there is a slashing event triggered, what happens is that event gets reviewed by the validators on the network first. So they say, is this valid? And there's these things called objective slashing conditions, which are easily provable. And then there's subjective, which are harder to prove. The objective ones, it's like pretty clear whether the penalty happened or not. The subjective ones require a couple rounds of consensus or social consensus for the validators to come to agreement. The cool thing is validators are really good at coming to agreement on the state of things. So they're tuned and like very, very well skilled to do this. So we're not asking them to do anything they're not used to doing. So we're just saying, check these slashing conditions on these off-chain services rather than on this like on-chain system. So they're very comfortable doing that. They can veto. So they have the power as a collective decentralized network of validators to veto a slashing condition or slashing penalty. So if there's there's a slashing penalty, they reviewed, they disagree, they can veto it. And that's a great thing because it's a decentralized network. So you have a decentralized set of operators that can say, no, we disagree with this. We're going to veto it. Nobody gets slashed. And two, it generally, if the slashing does go through, it probably is for a legitimate reason. So there's lots of backstops. The last one, which we're pretty excited about, it won't be live at mainnet launch, but we are going to be introducing a form of staking insurance. And what that is basically staking insurance can cover the loss of any slashing condition. So how that works is just like anything, you take out insurance on, property or something, for your car, for your house, for your, whatever it is, for your health, you pay a premium for that. So how it would work is that as a staker, you can say, I checkbox, I want to, insure this. And so what happens is you instead of staking, 10,000 XRP or 100 XRP, it's like 102 or 103. So you're paying an additional amount for that staking insurance. What's happening is that insurance is that additional amount is going to a separate insurance pool. And that is pooled just like insurance is, and it's only used to pay out the claims for any slashing, condition. We're also exploring ways to apply that amount to things like the loss of like a SAFU fund, kind of like how Binance does. There's ever and this is like a very low probability, but network attack or some type of loss due to hacking, there's an insurance fund to kind of pay out people that we've been in the space a long time. These things happen, and the best thing is when the team can step in and say, everyone's made whole, we're all good, let's move forward. So like that's kind of the design mechanism for that. It's like a rainy day fund. But basically those are kind of some of the things that we're doing to ensure kind of downside or like manage the downside risk.
Yeah, thanks for walking us through that, Warren. I appreciate that. And look, things do happen, so it's good to have those fallbacks in place as well. I guess I wanted to go to the hot update number 3, the GBM auction, and a recap of that. Because, well, you can explain why you chose to do that kind of fundraising and how it worked, I guess, and what was the community response, and then my follow-up question is like, what lessons did you learn?
Yeah. So last week we launched an initial distribution auction, and this is IDA for short. I hate acronyms, but they just seem to happen. So the IDA is a form of it's a public auction that allows people to bid on what we call token bundles. So what we did was we created or a really cool artist hand drew a series of NFTs. Those NFTs are kind of contribute to kind of the community. They're turtles. IMUA is obviously a Hawaiian word. Turtles are very big in the Hawaiian culture, and we can go into that in a minute. But what happens is that the bidding actually is done on the NFTs themselves. Those NFTs correspond to a certain amount of underlying tokens, native tokens that people can use the NFT if they win the bid to actually claim, a portion of tokens upon TGE. And we first of all, backstory in this, we were entertaining doing a community round on kind of the classic kind of community platforms. We went through the process with a lot of different platforms, and we just felt like something was missing. I've always been in the space a long time. I love auctions. Solana did, a public auction because it's a great way to effectively solve for price discovery pre-TGE. So the auction started at 0. Each bundle started at 0, and gradually, each bundle got bid up, based on the demand. And we had, I think, 1,982 bundles total. Some big bundles, some small bundles, so kind of a piece for everyone. We were incredibly excited to roll this out. And the first day, I think we got over $500,000 in funding, kind of, or in bids, right off the gate, which was really awesome to see. And then what happened is we noticed there was kind of a stall, and we were kind of making changes to the interface in real time. There were a few things that we needed to like switch out and change, which kind of created more of a stall. So what happened was we ended up there was nearly 700,000 in bids total. There were over 13,000 individual bids that happened. And we decided kind of at the 11th hour before the auction closed to actually close it prematurely, refund everyone their bids, and they got to keep their rewards. So how the rewards worked, which is the most exciting piece, is as you bid on the token bundles, when you get outbid, you get your entire bid back and a 10% reward of your bid amount. So if you bid on a $100 bundle and you get outbid, you get your $100 back plus $10. So we saw these people literally going and getting outbid, getting $10 back, and everything was on chain. So we ran this on Base, the Base network,
Yeah.
for a variety of different reasons. The deposits or the bids were happening in USDC, and so all this was on chain. So there were confirmations of this, happening, and the
Yeah.
base team even reached out saying, "What are you guys doing? There's tons of transactions coming through." And it was just a cool experiment. The community kind of loved it. And then when we refunded, everyone got their bids back plus the reward. They got to keep their rewards. We ended up paying out over $70,000 dollars in USDC. That was basically free money that the community earned for their participation in this experiment. And then we also are adding all the bidders to a whitelist for a future airdrop. So it was a win-win-win, across the board for everyone. We had a blast. The community response has been overwhelmingly positive. I think there's a demand for us to kind of roll it out again. We'd make some changes, based on it, because this is the first time anyone's ever done this. So we were kind of sticking our neck out there to see what happens. And it was just fun to experiment on production, in production, with kind of live money at stake. And yeah, but the community loved it. It's very rare where you see you're getting paid to effectively lose and get outbid. And just it was a great pay week for some bidders. I think the largest bidder made over $10,000 in rewards just for that week. Kudos to them. And then the average amount of rewards was over $700. So people made some real money, and it was really cool. And we're proud of that. We are kind of recycling everything to figure out what the next steps are and what the options are, but it was an awesome experiment to run.
Yeah, fantastic. I mean, who doesn't love an auction? It is quite a lot of fun, and when you get outbid, going back in and bidding again. And so I'm really pleased to hear that the community had a good response to that, and that you will maybe tweak it and go back and do that again. But my question is, why did you choose to do an auction instead of traditional fundraising methods? And I just have to tell you, this is going to be a funny live to watch back, because I'm not sure if it's my internet connection or yours, but you keep freezing. So there's some great facial features of you, Warren.
I don't see myself freezing, so I don't know if it's mine. I haven't gotten any network
I don't know
issues,
if it's me or my dodgy location, but
it might be.
yeah,
so
could be
the reason why we decided the public auction route is, private rounds have really, in the last really 4 or 5 years, have created this kind of high FTV, low float environment where, private investors will invest in projects at a valuation that they think, is market kind of market rate. And then these projects go and then they launch and they do their TGE, and you see this massive kind of down only kind of chart. And that is mostly because the price discovery, which means basically how do you price this thing? It was broken, right? Clearly the private market valued these projects at a premium to what the public market felt that they were worth. And so this is these down only kind of environments, it really creates it's horrible for the holders, right? The early investors, it's not great because they see sometimes 90+% decrease in the value of the last round. It's not great for the individual holders who sometimes they bought at the top and then they see this crashing. And I've seen this play out over and over and over. And there's auctions are kind of designed to bring the community in to help participate in this price discovery process. And so that after the auction, you have a more realistic kind of view of what the actual fair market value of the token should be. And then you have a much better TGE. So you look back and you can do a study of projects that did, auctions, public auctions, which used to be really popular back in 2017, 2018. there was and Solana did theirs in 2020, actually March of 2020, which is probably one of the worst times to do anything in the world, but they did this public auction. But if you see some of the projects that did public auction, they actually tended to perform better based from their TGE than other projects that didn't. So we're hoping that the public auction model becomes popular again because we think it's better for the market in general. It's better for everyone. It's also not great for like the teams building these protocols to see their 99% down on the chart. It's really horrible for morale. And as a co-founder and CEO, you want to boost morale of the team, make sure everyone's believes in what they're working in. And if you have a chart that says like the otherwise, it's hard to do that. So that's why we went the auction route. We went with the novelty of the IDA because it was the most maximally community aligned. We were doing 100% unlocks at TGE. We also had something where of all the total bids that we raised, 75% of it was actually going to go to token buybacks and burns. And so the team was actually only keeping 25% of it, which is an additional kind of community alignment thing to allow for people that want to sell at TGE to do that. And then the buybacks can happen and kind of create more stable market. So there are so many mechanics that went into this, tons and tons of game theory, lots of like really crazy math. I just like geeked out on this and thought it was like the coolest thing. I still do. I think if we were to run it back and make some tweaks, there would be a entirely different outcome. So we're exploring that now.
I think it works too because it does actually engage the community. And like you said, it's sort of, I've seen projects where their token is down 99% too. It's not good, not only for the dev team and the team that you're working with, but it's also not good for community morale. So doing something a little bit different makes it interesting and keeps that momentum going, that moving forward going, right? Which is what you're all about. So if you could touch on the turtles and IMUA, and just for anyone that's listening in, if you have any questions, drop it in the comment box. I'll see if Warren can answer them for you. But yeah, let's go into a little bit more about IMUA before, gosh, the time passed so quick. I'm having a great time having a chat with you, Warren. And you can talk, you can really talk. But yeah, just break down, because we didn't go into it at the beginning. I know I've hosted you before, but yeah, just break down IMUA and the turtle and for us.
Yeah, so the turtle, this was very much community kind of driven. We did a bit of like a contest of like, create the IMUA mascot. We had some ideas ourselves of like what could come out, but ironically, someone proposed a turtle, and it was one of the top kind of mascot types that we had in mind. And so again, we were like aligned with the community on this. So we commissioned an artist to create. And the reason why a turtle, so sea turtles are kind of my spirit animal. I grew up, born and raised in California. I learned to surf when I was 4, if you can't tell. I lived in Hawaii for a number of years. And sea turtles are fascinating because, when they're born, they're like born into the hero's journey. They have to cross a beach to get to the ocean without basically dying in their first like number of hours. So you'll probably see it on National Geographic, like seagulls come up, pick up little turtles, it's the saddest thing. But the ones that make it cross enter into the ocean and start their journey in the ocean. What happens is they travel literally thousands of miles, away from that one beach every year. But somehow they always come back to the beach they were born at to lay eggs and kind of start the cycle again. So I think it's like fascinating that they can kind of traverse across the world and somehow know their way back, to home. And that just was inspiring. Turtles are also just, they're known for being, resilient, and strong, and have typically a long lifespan. We also like the whole like turtle and the hare kind of story of like, the turtle is kind of slow and steady, wins the race. Staking itself and restaking is kind of boring. Like it's not meant to be real flashy. It's not meant to be super fast, but it's just kind of slow and steady. And really, what the brilliance of staking is the kind of the idea of compound interest, where if you're holding an asset, it makes sense to stake it because you're going to be earning rewards on that, and those rewards compound. And we have actually a system where it does auto compounding. It makes it very easy for people. So the sea turtle was just like a no brainer for us to adopt as a mascot. It's very much hooked into the lore. The community loves it. They've like taken it and created lots of different versions of it. It's actually called the mascot is called Ticker the turtle. We created a Telegram mini app game. It's a staking game that's live right now, where people can actually they race around in these DeLorean cars around this island, collecting shells. They can swap those shells for eggs, which they deposit on different beaches. There's XRP Beach, there's Bitcoin Beach, there's Solana Beach, there's Ton Beach, Ethereum Beach. And so as you deposit those, you actually earn rewards on top of that. So it mimics the whole process of staking in a kind of more gamified way. And there's a leaderboard. People are going nuts over it. It's a lot of fun. We will be taking that leaderboard and doing, a reward distribution based on those in the leaderboard. And there are some people with, and then the idea behind this was, we recognize that some people have more money than time or more tokens than time, and they can earn rewards by staking those tokens, fairly on chain, etc. And then we also recognize that people have more time than tokens, right? And so we want to reward them too. They participate in the game. They spend time, racing the game, making deposits and stuff, and they get fairly rewarded as well. So we really wanted to kind of cast a wide net to be able to have as many people participate, in the rewards kind of system as possible. And it seems like it's resonating.
Yeah, I think I love that. I love the gamification for the community as well, because that also keeps the community engaged. You touched on like that, because that was in my rapid fire questions. If IMUA was an animal, what would it be and why? And you've answered that completely and more. But I guess what you mentioned also about the staking being quite boring and it's actually something that is slow and steady. So, I do a bit of staking myself in other ecosystems. I actually like seeing my rewards compound. I like that. And so, for some people, staking is better than like trading or, high risk yield. So that opting in for 30 days and staking and seeing that compound or doing it longer than 30 days is actually of a benefit to some people. I guess I wanted to ask, to sort of round off before we finish, what excites you the most about IMUA in the next 12 months?
Really going from this, I always tell people, because my co-founder, RJ, who's the former co-founder CTO of Harmony, obviously both of us have launched and scaled, these layer one blockchains, before. And so for us, TGE mainnet is just the start of the race. And really everything we've been doing up to this point has been kind of the training for the race. And this is a marathon. It's not a sprint. It's kind of like, at first it's like a sprint, kind of endurance sprint, but it really is the longevity. And we set out to do this. We could have done anything, in the space. We've been working in the space for a long time. We really liked this opportunity because it is multi-cycle. Staking rewards are particularly attractive during bear markets, when yield kind of dries up everywhere else. People kind of retract to the safe kind of passive yield, or safer passive yield. And so for us to have, a long-term outlook on this, we wanted something that could survive multiple cycles. It's not just a hype-driven kind of one-shot deal. And so for the next 12 months, launching mainnet, doing TGE, we want to establish, stability with the network, start to scale it. We'll be, initially supporting, XRP, Bitcoin, ETH, Sol. We're going to be introducing other assets like Doge, TON. There's high demand for Hyperliquid or Hype. And so we want to be able to kind of cast a wide net. Our strategy is based on like horizontal scaling. If you're a student of internet history, there's the vertical scaling, which is kind of what Apple is doing. They do everything, full stack. Then there's kind of the horizontal scaling, which is more of Microsoft, where they wanted to run, Microsoft applications across a number of different operating systems. And that is kind of where we look at this. So that we're in pole position to kind of capture the upside of many different chains. But we can still have some favorites within those chains personally, but agnostically, we don't play favorites. So anyway, so there's a lot like coming out the first year. That's a big deal. But we look at this long term, and so we're very excited about the opportunity.
Yeah, I'm excited as well. I have a few key takeaways, but before I do my key takeaways, what's one myth about XRP that you would like to personally bust for all those that are listening in or listen back?
Yeah, there's so many.
Okay, give us your top three then. Top three.
Yeah. So I mean, just some for context on this, like when I was at Ripple, part of the reason why this is before the quote unquote XRP army, kind of like, and one of the strategies we had were, hey, let's just empower the community with information, like objective truths, right, that can be easily verified. And the more we did that, the more we kind of armed these community members with, effectively flood fighting, right? Where people would say XRP is centralized. It's like, well, like, no, when you talk about decentralization, there's lots of different versions of that. Vitalik outlines like many flavors of decentralization. So like from a network topology perspective, it's not, it's quite decentralized. And you can use different decentralization indexes for how to measure that. The Nakamoto coefficient, the Gini coefficient, etc. XRP passes, a lot of that, and it's actually quite decentralized if you compared to other networks. So that's like easy FUD to fight. The second one is, XRP is like controlled by Ripple. It's like, again, that's objectively untrue. I think right now Ripple only runs one validator. Now, at some point, that was true. I will admit that because when I joined in 2016, Ripple ran all the validators. There was a handful, and they're actually running on a single AWS region. Big part of my job was to decentralize that from Ripple running all the validators in one region to Ripple running one validator. And the majority of the network being run by external validators. We accomplished that, and it was very difficult to do. So I take a lot of personal beef when someone says, opposite. It's actually not true because I spent a lot of time.
Before you go to point number 3, Warren, I just want to add to that. We now have at least 4 members of the community that are running validators. So we're seeing an uptake in actual community members onboarding and being validators. And I think that's fantastic. So that speaks more to the decentralization. I'll let you go into number 3.
So number 3, like I'd say Ripple's holdings have become an issue. We recognized that pretty early on. I was on the team that not only designed and created the escrow mechanism, which is on chain to lock up XRP, but also created kind of the infrastructure for Ripple to do that, lock up its own holdings. And that was, something that we wanted to do in a sense where 1 billion XRP is unlocked every month and can be used. And for a long time, Ripple published a markets report, extremely transparent on what exactly it's done, with that. No other project has ever done that. Ethereum doesn't do that. The Solana Foundation doesn't do that. No knock on them, but like Ripple has been extremely transparent about this and has actually been a really good market participant and is like very, very transparent and open. And that transparency was actually used against them, by the SEC. So like when the SEC says they want to police and promote fair, more transparent markets, they actually punish you if you're more transparent. At least the previous administration did. And so, I take offense to that because I think Ripple's been a really good market participant and steward of the network. Yes, they sell XRP. If you actually track and do the analysis, it's a tiny, tiny, tiny percentage of the total volume that's traded. Ripple trades 10 billion, XRP.
1%, isn't it, Warren?
Yeah, I think it's like it typically is well below 1% of total volume, 24-hour volume. Now, XRP trades, sometimes 10 billion in notional value like every day. Yeah. So that is it adds up. But having like less than 1% is actually, if you understand markets, what happens is the market coalesces around that and absorbs that, and it becomes like the norm. So it doesn't actually introduce what a lot of problems happen with these other token projects is they have scheduled unlocks that happen like on a monthly or quarterly basis where there's just a gigantic amount of tokens that are unlocked at that point, and then that creates a lot of selling pressure and kind of chaos. Where Ripple is doing it in a way where it's a daily, and there's a lot of data that suggests like daily kind of lock sales are actually better for the market. So that, you could definitely, I could debate with people about that. And it's also like, I hate to say it, but there's a lot of token projects that do this that are less transparent about it and don't get heat for it because they don't disclose. So they're just operating in stealth about this. And, I kind of say shame on them because they don't really step up and say, yeah, we do it too, but we don't say it. So at least Ripple kind of discloses it, which is in the best interests of users in the market. So anyway, I could do this all day long. It's been over 4 years since I've been there, but I still feel like I'm charged up to defend the market.
Yeah, no, thank you. Thanks for your top three. And I'm pretty sure with your experience and connections in the ecosystem that you could definitely talk for a full show just about that. We could do a myth busting XRP live one day, Warren, when you have a little bit more time. But I guess my key takeaways today are, you're really engaging with the community. You're going to be going live in quarter four, with a staking platform that is chain agnostic, that includes XRP. And I'm really excited to see how I can utilize that because I do like staking. So I'm excited to onboard with that. So let's just go to the socials and the website to make sure everybody knows where they can find you and how they can onboard with that.
Yeah, so the IMUA can be found on X, just at IMUA, IMUA, or IMUA, IMUA.xyz. Pretty simple. I am on X at Warpaul, WARPAUL. You can find me there. We're very active on X. We also, have Telegram, Discord, etc. I think X is our primary platform, and followed by probably Discord and Telegram. So yeah, check out the project. Subscribe to get updates. We're all constantly pushing new news and all kinds of stuff. So.
Yeah, thank you, Warren. And I want to thank you for your time today. And thanks for coming on the Crypto Queen Perspective and actually doing a live with me. And before I go, one last question. Are there any specific projects on the XRPL, that IMUA is collaborating with or would like to collaborate with?
Yeah, I'm not. I don't think we'll disclose exactly because I don't want to tip any hats or whatever. Because I know there's probably announcements coming out, but we are excited. I'll say this: we're excited about the developments that are happening to enable more programmability with XRP, which would enable more yield products. I'll give some hints here. Uh, and that to us is like, there's a whole bunch of different projects that we are looking to work with. It's also been fun to kind of re-engage directly with the XRP community, because over the last 4 years I've had my head in the weeds on a lot of this kind of underlying protocol stuff. So it's hard to participate in live streams like this and enjoying spaces with the XRP community. But it's been amazing to see how big it's gotten, and it's like, people are surprised at how big XRP is in terms of community size, and it's like, well, you gotta break out of your comfort zone and every now and then and check and see what's going on the other side. So yeah.
Yeah, fantastic. Thank you. I mean, the XRP community is one of the largest communities and ecosystems in the blockchain industry and
I'd say
strategy.
one of the largest and probably most loyal.
Yes,
Because
100%.
I don't know many projects that have been through 4 or 5 years of intense public litigation, with a powerful American agency, and it's just awesome to see the success that Stu Alderati has had,
Yeah.
with on the legal side, and I appreciate all the effort that Brad and Chris and the team and Monica have gone into, and I'm still in touch with them very closely, and so it's always fun to see the wins that come out of that.
Yeah, it's awesome. They don't call the XRP army for no reason, right, Warren? They're called that because they know how to, through the test of time, carry their weight through to the end. And so we have come to the end of that lawsuit with that 3-letter agency, the SEC. So kudos to everyone at Ripple. But most of all, thank you again for your time today. I really appreciate it. Thanks for everyone tuning into the Crypto Queen Perspective. I'm going to sign out, but I'll just give you a teaser. Next week, I've actually got an Australian company that are branching out on the live. They'll be doing a live stream with me. So yeah, that's pretty exciting as well, as I move around the globe with all the different projects. But thanks again, Warren. Look forward to seeing maybe a video of the D-app when it's up and running and working. But yeah, thanks so much. Take care, everyone.
Definitely. Thanks.
All right. Ciao.